Hello everybody, thanks for tuning in to this episode of KCLau's Money Tip Show. My name is KCLau. I do financial education. Basically, I want to help you to make more money, save more money, and retire earlier than the usual people in Malaysia. So this is what I do. And thanks for tuning in. Today we have Mr. Tommy Lim Kok Huang here from ICT Zone Ventures Berhad. Is a subsidiary of NTP World Group, and we are excited to actually talk about this scheme, which is very new even to me, because it's the first time I heard of it, where they're doing like some hardware rental business. And in fact, this kind of business, they are just not doing it for themselves, and they provide a scheme to let some other retail investor like us also can take parts into this kind of investment. So I've seen some YouTube video where they are being featured in the media like Astro Awani and TV1, so reporting about their special schemes. So today, that's why we are here today with Tommy with us. So Tommy, how are you?
Hi, morning everyone. So thanks Casey for arranging this session. I would like to share with everyone because it's true. Interest scheme is very new, pretty new in the Malaysian market.
Yeah, let's first talk about what is this scheme about, right? Maybe you can give us an introduction about that.
All right. Actually, interest scheme is under the preview of SSM. Right. So every company who actually in the market, any company that would like to raise fund in Malaysia market, there is 5 channels. Right, I think commonly people would know is through the SC. That would be from buying the shares. So that's one. Then the second one is on the under the bank negara. So it's whether you deposit your money in banks and things so on. That's number 2, right? And number 3 is preview under the bank negara. Also there is a mutual fund and insurance. So that is 2 and 3 and 4. No, it's 3. Then, in fact, there is also another one is from the corporasi, meaning it's a corporation, so it's under the SKMM. So, and another one is commonly that people do not know, under the Company Act, Section 4, Part 5 of the Company Act, actually allowed the company who register under the interest scheme are allowed to raise fund from the public as well. So, commonly people know previously is more onto the club membership, these time sharings. So all this is actually dropped under the interest scheme. So our interest scheme is also part of this section, but it's more to enterprise interest scheme. So we raise fund directly from the market, and the people who invest on the interest scheme actually participate on the investing on the specific business, right? So like example, ours is computer renting and leasing business. And we do have interest schemes such like palm oil and swivelet and things so on, even property interest scheme. So this overall cover the way that the public and the vendor actually can, operator can raise fund from the public.
Okay, nice. Let's get to the set of slides that you have prepared for us today, so that we can understand more about that. Okay. I'll distribute these slides for the audience so that they can get to know about that. How about this chart? What does it tell us?
Actually, this chart is we are getting from this club group of global leasing report. In fact, leasing company, especially in IT, is not really very familiar in Malaysia market. In fact, this business is nothing new in overseas. You see, like this is actually from US based. In fact, we also participated to these international technology rental associations. We are part of their members. In fact, in overseas, leasing and renting of the IT equipment is probably very popular, and it become a very driving trend on the current economic structures. That's why, in fact, we are tapping on this future business trend that people don't buy PC anymore. People actually lease PC. So this chart actually is to explain the market size of the IT industrial on the leasing business by itself. You see, like Asia is easily taking only 20%, and in fact, there is more contributor from a developed country like Japan, New Zealand, and Australia. Even in Southeast Asia itself is still a pretty premature kind of position. Yeah.
So it's still in the infancy stage, and so this is the breakdown of the chart, right? Just now. Okay, good.
Yeah.
Okay, so
in fact, in Malaysia,
you want to add anything about Malaysia?
Yeah, in fact, in Malaysia, people more commonly know about the copier leasing or rental instead of
like photostat machine, things like that, right? Okay.
Yes, right. Yeah.
So it's more like they don't want to buy those machines to run their business, but instead they just lease it so that their upfront capital will be low, right, for the business to to use that.
It's more toward from you are moving from capital expenditure into the operating expenditures. So people nowadays, you can see even Microsoft is not running on proprietary license anymore. 365 is one of the way of leasing actually. You pay as you use. Right, so copier is very well known already in the market, because in fact copier market have been driven by the principle by itself, like Konica Minolta, Fuji Xerox and things. But PC is actually driven the market by a company like us, the operator like us, the IT company like us. But again, a good news also to everyone. In fact, as internal info, that HP Hewlett Packard by April next year basically will launch a program called PC as Service. So PC as Service is actually a part of a rental conception, meaning HP will take, as a principle, will take this first step to actually introduce to the market, meaning in future, basically you don't buy HP PC anymore. So you will rent or lease the PC. So in fact, we are working some collaboration with HP on this.
So if let's say HP is like doing this, they'll be like going into the corporate market, and then say Intel want like 5,000 PCs, so they'll just lease from HP instead of buying it outright. Okay.
Yes, right. So this is a very upcoming market. That's why I have seen that as we are very much focused on this business. So I see that the market will become very mature in starting by next year. Because when HP started with it, Dell will come in, Lenovo, Acer will come in.
So these are some of the benefits of leasing. So like, can you like briefly explain to us why business prefer to lease instead of buy those stuff?
Yeah. Okay. You see in overseas, people will see that PC actually is a tool to actually help them to manage their business and to actually grow their business, right? So it's no point that actually you allocate a capital expenditure to actually put into those equipment, and you actually hold on your capital money into that machines. Then again, everyone will see that IT equipment is a depreciating product. So when it's a depreciating product, why you want to keep an asset that actually depreciate? You should actually take the asset as a tools, as an expense. Then you can charge into the accountings. Right? So that's why from the first point you can see less initial cost. So versus a technology, if you want, in whether it's hardware, software, it actually consume a number of quantum of the investment. So by doing a leasing, actually you can taking a lesser money, allocate a lesser money to actually to able for you to use the technology. So you can move on faster, right? So at the same time, second point, because of depreciating product and technology change at time to time, and it's quite fast. That's why if you are taking a leasing, you can move on and refresh and upgrade your equipment from time to time, right? So you don't start with, because I have already put a big sum of money invest on the technology. So whenever technology change, I can't flexibility to actually dispose my asset. Then move on to the new technology, right? So of course, again, the number third, by leasing, so you will know how much is your OPEX performance, so you can actually predict your monthly expenses, right? So, and a lot of time in the contract, so we will actually run together with the maintenance services that we call SLA. So when it's a leasing, so you will actually run together with the maintenance services. So when it's a maintenance service, so you will actually run together with the SLA. So when it's a leasing, so you will actually run together with the maintenance services that we call SLA. So we will actually run together with the maintenance services that we call SLA. So those days when you buy asset by actually taking on outright basis, so you probably need to actually look for another vendor to actually do a services contract. So by doing a leasing and a rental package, actually the services is inclusive into the monthly contract. So this is you actually eliminate the maintenance worries because the contract is come along together with the leasing. Right. So to avoid at the same time, when we are the one who manage the machine, so whenever the machine you want to update and refresh, so we will take back the old machine, and in fact we will do remarketing back again to some user that actually do not really look for a latest product, and maybe or mainly on those minor usage like data entry and things. So old machine can be reused back again. So in fact, this in the other way actually it helps out the earth lah. So it's very much on the green proposition kind of business model, right?
Okay, good. And what kind of equipments that you are leasing right now, like for the leasing for providing leasing?
Currently, our leasing equipment is very broad. We can start from mainly from a PC to a notebook, printer, copier. So then we can even rent out the projectors and servers. In fact, servers is upcoming demand because of the cloud conceptions and things. Whether it's a private cloud or public cloud, so you still need a better equipment and you need flexibility, right? Because when you are renting or leasing on the servers, actually or data storage and things so on, in fact you can lease based on the current requirement that you need. So you do not need to worry actually later on within 6 months or a year when you need a bigger data size or the servers capacity, you need to reinvest the equipment. So you can actually start with very below basics technology, then you can upgrade from time to time.
Like when you talk about server, like how is it different from those hosting company that are also like providing servers for the businesses?
Actually, market basically in common do not know. Actually, those hosting company they are actually taking leasing also, because you see the equipment they would like to actually invest actually is subjective. So normally the the hosting company actually will lease from a company like us. So whenever they had more demand on their customer base, then they will increase their equipment and expand their lease contract.
I see. That's eye-opening to me. Okay, so yeah, maybe you can tell us a little potential of the market. How lucrative is it?
Okay, you see, if from the PICOM report that we had, in fact, this slide is a summary from there. In fact, Malaysian market itself is at about size of 20 billion dollar ringgit Malaysia's kind of IT size. Easily 10 billion already at communications, and another 10 billion actually separate to the hardware, the software and services. So this is a Malaysian market. In fact, you compare to the world market, 20 billion of RM Malaysians in Malaysia market actually is pretty small, right? But again, every year our demand in the IT is actually grow at about 5 to 6%, right? And this is our market trend. And in fact, when you see from the slide, a leasing business itself in Malaysia is still pretty earlier stage, so that there is a very big room to actually spending. You see, taking example as specifically at the government sector, because this is a sector that we are mainly focusing currently, right? So government sector last year we totally participated 700 million of tenders, meaning the inquiries. So, and we are able to only capture a 5% market shares. So, in fact, our target is not much really. In fact, by able to target about maximum at 15%, we already will become a market leader, right? So the market is there, and in fact, the trend is changing, right? People is talking about leasing. In fact, to me, again, I think I want to take this opportunity to explain. People will say rental, leasing, but again, to me, this is actually a terminology, right? Subscription is also leasing, right? And outsourcing is actually leasing. No, it's just how you name it. Hire purchase, even our car. No, I think most probably everyone actually buying car through hire purchase. Right, until you actually fully pay off your installment of your car, actually then you only own the car. So hire purchase actually you lease. You lease it on the finance lease basis. So this is also leasing. Actually the market is there, right? So it's just maybe people do not aware that actually we already on that mood of business.
Yeah, definitely agree with that. So let's move on. Okay, maybe you can do some introduction about your company then, and why did you introduce this interest scheme to us?
All right. So ICT Zone Ventures Berhad actually had started. We had registered the company in 2010. Why we registered the company in 2010? In fact, we had started doing the IT business in year 2000. I came out from ExxonMobil Malaysia to started my business. That time, basically, I'm alone. So the whole company actually is myself, a person. So at that point, actually, I started with projectors selling, right? And why on projector selling? Because at that time, my partners, my group MD actually is doing the corporate training business. So in fact, we are tapping on the same customer base and things so on to actually go into the market. But from there, we had seen that projector is actually emerging in those years in 2001, right? So it's emerging with the IT. So like what you can see now, all the IT company in Lau Yat and things, so those retail company, they are selling projectors. No, those days projectors is AV and IT is IT. Right? So we had seen the trend is coming. So we take over one IT company. So we form our ICT Zone Berhad. So that's how we go into the IT. And starting with that, actually we are doing the retailing business, and we had moving into mostly the university. And started in 2006, we had the chance to actually starting to do a rental of projectors. And we go into the market in a very unique manner. Because that point of time, projector rental per day is actually hitting about 500 to 600 per day. With actually 800 NC lumen. NC lumen actually is the brightness of measurement on the projectors. But again, we have seen the market of the pricing on the projector actually is reducing. So we are daringly to actually introduce the market on 200 ringgit only per day. That's how we enter into the projector rental market. Then we start our renting business in the short-term period. Per day or weekly basis, and from there we started had the inquiry on PC and notebook on the renting, and we started invest a second-hand machine, and with only a very small investment. That's how we enter into starting into a rental business, and we had grown our business, and up to today in terms of short-term rental, we easily captured 30% of the short-term rental market shares. A lot of events like recent Olympic, Winter Olympic, is events and things. So it's all is supported by us, right? Then from there, when we started into short term, and we see we can't really grow our business in a bigger way, because short term rental business is basically is seasonal. So our income is actually very humble. Right, so we don't able to actually long-termly actually to expand the business and grow to a significant size that are actually able to influence the market. So by that we have started look into the long-term contract. Right,
so
and
when
we start participating.
Like when you started the long-term.
That is in the year of end of 2009.
Oh, I see.
Right, we start. That is after easily about 3 years that we have really familiarized the renting markets, and we have see the demand there, and the grow direction of this business. And in fact, we do study a lot in overseas market. And in fact, myself and my partner actually we have went over to Las Vegas. It's just specifically to learn to attend a conference. It's just specific to learn the market trend, and we able to capture a lot of things there. And it brings us more confident that this is the right business for us to grow, and we definitely able to grow to a certain big size in one day. Then we are putting very focused, and we start into penetrating the long-term rental contract. And in fact, within a year, happy problem come in. We have able to manage to have a numbers of contracts and businesses, but we lack of capitals. Right, so when we try to engage to the banking industry, the debt market, in fact, we get turned down. Because until today, I think, sadly to say, Malaysia's banking industry, the financial industry, still take IT is a high-risk business. Right, so as we on the hardware part, so they classify us in that manner. So that's how we find the difficulty into getting the financing. At the same time, the product that if we are able to get financing, the product of financing that we are getting actually don't help the company to be continue growing at the size. So because that is more toward on the term loan kind of facilities. So but again, that facility, when we understand the leasing business by itself, we have seen actually we are not able to. We still can be profitable and make a happy money. But again, the company won't be able to grow. In fact, we are actually helping the bank to grow.
You're making
so
money
the bank is the one that, yes, able to multiplying and reinvest the money whenever we take borrowing from them. So then we look into the market. So we look for two strategies at that point in time before we able to get approval from interest scheme. We actually try to meet up the private equity company. At the same time, we also actually apply the interest scheme. In fact, interest scheme came to us in a very in-plan kind of proposition. Just in one day, my MD gave me a call in early morning. He said, Tommy, you don't go into the office. Please go to attend SSF is actually having a seminars on the interest scheme. Go to understand whether we are actually able to write on this platform to actually raise our fund. And here we are, and we go through easily 1 year, 3 months to actually getting the approval. It's not easy. A lot of justifications, a lot of proof of concept. So lastly, we managed to get it, and proudly to say we are the only interest scheme company that are non-agriculture. Because until today, majority basically is agriculture based, right?
Like
and that's how we are
computation, things like that, right? So it's
yes,
but
right.
the ICT, you are the only one, is it? Like in the ICT niche?
Yes, right. Yes. Right. So from there, actually, we able to raise, and we start growing from there. Then, in fact, in 20, we also apply over to the Shariah compliant. Is looking forward to Bumi partners or investor kind of platform. At the same time, in fact, that is not ultimate why we are going on the Shariah compliance, because we had a vision or a business plan that actually we have seen that Malaysia as an Islamic hub in the region actually. And when we talk about leasing, most of the leasing that are currently provided by the overseas company, right, is actually offering a conventional type. So we have seen that with this proposition that we have, and at the same time that we are growing our business, so we can actually tap on this unity that we are having in Malaysia, to bring in a Sharia compliant leasing product to the Malaysian market, and this is obviously able to bring us in the long term into the overseas market, carry a Islamic type of leasing product into the region. As we like our neighbor, Indonesia is a very great and another big market, right? So this is our journey that we are trying to move on from now onward and things.
Yeah, great. Great to know that you are. Great to know that
that's why from there also. In 2013 also we take the opportunity, because we had already had a significant size and things so on. In fact, we put ourselves registered to Bank Negara, and we get it. We are able to get approved, and today we are actually ICT Zone Venture is just no longer an IT company. We are already hybrid. we are a part of IT company. At the same time, we are also can be claimed as a financial company that able to provide a leasing and factoring officially to the market. Right. So this is another milestone that actually we achieved in 2013. Right.
Okay, let's dive into what is the interest scheme about. Like, can you give us more information here?
Okay, as I think I do mention a little bit just now. Yeah, interest scheme itself actually is very specific. It's like it's very much close like a mutual fund. That interest scheme, anyone who invests in the interest scheme, actually you are investing to a specific product, right? Like our product is a leasing and renting of IT equipment. So you know that when the money that you are putting into it, our product, so you are actually the money that we receive is only able to utilize for the rental and leasing of IT equipment contracts. So we can, let's say, even use the fund that we receive actually to do a IT outright business. We can't do that. So meaning every time the disbursement of the money from the trustee that are keeping the money, so we need to have the justification of the contract in hand to actually to disperse the fund to be utilized to purchase the asset or the IT equipment for the rental or leasing contract. So in fact, if you want to have a very simple understanding, interest scheme, actually you are investing your dollar to actually do a specific business at a specific time frame and with a specific return. So everything will spell out very clearly in the trust deed or in the management agreement. So the operator like us,
you mentioned about trustee. That means the money you don't keep it, and is basically owned by the trustee, right? And then
yes, you keep by the trustee, and in every time when we want to disburse the funding, so we need to have a proof of contract. It's $1 to $1 of a kind of control. So this is how is a part of the safeguard to make sure the operator do not misuse the dollar, the money, or in fact it's not overused the money within the fund that we are available.
So it's basically very similar to unit trust, right? But just unit trust, fund manager, they use the money to buy equities or buy bonds. But
yes, right.
In your case, you are using it to run the business, right?
Yes, right. So mutual fund actually is until today is already into a certain area that by industrial. So you actually invest into say oil industrial mutual fund or financial mutual fund. But again, to which company, to which operation, you actually mainly you won't know. But to interest scheme, you know that it's for ICT Zone Venture, it's for a rental and leasing business of the IT equipment, so that's specific. And how much is your return, interim or return on year basis and things so on, so you will specifically know. And how long is the maturity of the funding, so you will know that in a specific manner also.
Like for example, your scheme is it like just one type of scheme, or like do you have like separate schemes?
In fact, we had started our interest scheme with scheme 1. So in fact, that scheme 1 is we already actually closed it. We are not offering anymore. So now we are moving into the scheme 2. But again, the scheme is also actually whether it's scheme 1 or 2, basically it's also to the specific of the rental and leasing of IT equipment. Right. So currently our fund size.
Now you're in scheme 2, right? And then the one shown here, is it like scheme 2's kind of?
Yes. The one that in the slide is a scheme 2. So our total approved fund size is 50 million. So every interest investment is 10,000, right? So it's majorly on the 9 years. So basically, I think what is in the slide is pretty straightforward and clear. So this is what the package that we are offering to our prospect.
Okay, let me go through this and see if I understand what it means. Okay, so the approved fund size is 50 million. So 5,000 ICT. That means there will be maximum 5,000 participants in this, right? Investors.
Yes, so 5,000 our maximum unit.
Yeah, maximum unit. So 5,000 times 10,000, 10,000 become 50 million, right? This is the total you can get.
Yes, right.
And if I invest 10,000, then I get investment return of 8% of this 10,000. That means like how much is that? 800? 800 a year, right?
Yes.
So I'll get 800 a year plus profit sharing. So this profit sharing, is it like annually? Do you declare it or upon maturity?
Okay. So the profit sharing, because we are running on the Shariah compliance, so our ACAP ratio is 30-70%. So 30% to the investor, 70% will be gained by the operator, the company. Right. So how we run the profit sharing? In fact, the 8% yield return annually is our interim yield, right? That we are paying off earlier to all the investors that are holding their unit. So by the end of the maturity, 9 years, so we are actually will tabulate the profitability of the company, right, based on the accounting standards and things and so on. Then we will look down on the total profit that the company will gain on the period. So the profit that will gain, say, example, is 100 million. So meaning 30 million will be distributed over to the investor. Right. So of course, because we have been paying the yield of 8% annually, so before the 30 million that we distribute to the investor, so we'll deduct whatsoever earlier yield payment that we have dispersed to the investor. So say total is put it just an example at 20 million. Actually, we have been disbursed to the investor earlier. So the 10 million balance will be paid out according to all the investors who are holding the unit equally.
Okay, so that means they are getting this fixed 8%. This is like guarantee, right? They are going to get it.
But in the
no matter how
terminology,
your
we
business is.
always disallowed by Bank Negara to say that as a guarantees.
I see. And then okay, so the profit will be like you have to this 8% is like advance that you are getting lah. So after 9 years, then you calculate from the 30% of the profit sharing, then the remaining will be distributed. Okay, I understand that. And then the term is 9 years, and it's capital protection. That means at the 9 years, I will definitely get back my money. This 10,000 will be mine.
Yes, right. Because you see, in the interest scheme structures like us, we had the commitment to actually putting in the capital's reserve fund for whatsoever collection that we receive from the business, right? To ensure actually the operator like us do not invest or overspend the dollar, right? So meaning the first 3 years actually we are keeping a 5% each year, and another next 3 years actually capping 10%, then 15 and 20. So to make sure by the maturity of 9 years, actually we are already had a reserve cash to return back the capital's investment that we had received to all the investors, beside the yield or the profit sharing calculations.
I see. That
So
means
this is to ensure
you have your schedule of putting aside money just to guarantee that they are going to get back the 10,000, right? This 50 million.
yes, right. Yes.
Okay. And then guaranteed buyback, what does it mean?
Guarantee buyback mean in the clause of the trust deed actually is like a saving. So meaning in any point of time, say today you put in the 10,000. So maybe later on, after 6 months, even after a week later, you have find that actually you do not want to invest. So actually you can actually cash out. Then the company is compulsory to buy back the unit with the rate that we have in the agreed. So in fact, in the scheme too, what is wonderful here is, say example, after a year, you are putting your investment. So and you have gained your yield of 8% after the first year. So what we are actually buying back from you, actually we will return back you the full principal amount of investment of 10,000. Deduct the yield that you have been earned on 50%. So mean here is, say example, if 10,000 you have invested and you have gained first year 800 ringgit. So we will return the 10,000 minus the 400 ringgit. So in technically, actually, your yield return become 4%.
4% instead of 8%. Oh, okay.
That's right.
So if you early exit, it is going to penalize on the return. It's not on the capital itself, is it?
Yes, right. And of course, we do have 1% of administrative. In fact, in a more correct way of explanation is you will get back 300. instead of 400.
Okay.
Right?
Okay.
So because 1% is actually is paying off on the administrative fee.
So 1% will be at any time you want to cash out, it will be 1%, right? Whether it's 3 years
Yes,
or
right.
1 month, right? It's still 1%.
Yeah. So so if the 10,000 is you have been staying on for 2 years, so actually just now first year is 3%, right? So if 2 years if you do the calculation, actually you are getting back again after the 50% of the yield, and after minus the 1%, actually you will get back 3.5%. So you will go up whenever you have stay longer on the durations.
So as long as you hold it until maturity, then there will be no deduction on the return you will get,
Yes,
right, when you cash out.
Yes,
Okay.
right.
So
Yeah.
this is
In fact, this feature that we put in is not meant to penalize or anything. It's as an operator and as everyone is putting money in our business, so we need to ensure that actually everyone's interests have been protected. You see, it will be very challenging if, say, one day everyone want to trigger the buyback, and so it just move in and out in the better at their best positioning. But again, for those investors that have been putting the money and they want to stay on to the 9-year maturity, so they will be having a challenge, on their higher risk at their investment. So this is to protect the interests of everyone. In fact, beside of the buyback guarantee, we had another feature that actually in any point of time, even over our website, we actually they not necessarily want to trigger the buyback option. They actually can trigger the transferable option, meaning their unit actually transfer or sell over to the other prospect or the other investor. Who most likely, if you look at our website, in one of the section, actually you are able to post your unit before in fact you want to decide to trigger the buyback option. Actually, you can trading at the listing.
How do I do that at your website? You say there's a site that
you see a trading and listing. Trading and listing after the FAQ.
After the FAQ, okay, trading and listing.
Yes.
So
you click in. Actually, you can submit your unit, and we will help you to post here. And in fact, we'll through our Facebook or website also to try to promote to the other investor. So actually, when you are triggered on this feature, actually, what you only we only will charge you 100 ringgit of administrative fee only.
So like in this case, okay, now unavailable, that means it's already sold, right? Like
yes,
for
right.
this one, let's say this scheme is what does it show? It's just offered on January this year, and investment date is the original owner investor, he bought it in 2012. It's 2013.
Yes.
And
okay.
what does this mean? Offer 2 units, so 1 unit is
you won't see the name of the person, right? So you'll see the certificate. So this person actually trying to offer for sale on their unit instead of they are trigger the buyback option, right?
And
so
then,
they can,
you say that's 100 ringgit being charged for administration fees, right? Do you charge the seller or do you charge the buyer in this case?
We will charge the seller, the buyer.
The buyer, okay.
The buyer will basically pay on that.
Okay, I'm curious
fact,
about
why
do they offer it to the open market, and why not they just sell it back to your company, right?
Because you see, when they sell us back to the company, actually they will lose on their yield. So when they sell it, offer to the other party is on the willing sell pricing. So basically, in fact, most of the scenario actually they are actually selling back on their principal amount. So and again on that transaction, the yield that they have been gained earlier, right? On this case, like they have been buying in 2013, the 2 years ago, the yield that they earn actually they still keep it. So either they want to actually sell it even a little bit below on the price.
It's still better than selling back to the company, right? That's the case.
Right. So and a lot of time that those serious investor, even our existing investor, would love to actually bought a unit over from here. Because when we on the end of maturity, so when we calculate our profit sharing, so we will calculate based on 2013. We are not calculating based on the unit transfer date, new date. Because the unit had been started in 13. So meaning when we calculate the duration on the profit sharing, so the duration of the profit sharing will be based on 2013. Instead of the transaction say take place in 2015. So in fact it's different 2 years, right? But again, the unit is qualifying based on the day one. When this new investment have been actually
so the new investor also participate in the profit that is made like in 2013,
yes, right.
2014, right? Instead of starting from 2015.
Right. And some, yes, correct. And some of the reason that some investors like to buy over the unit that available here is because the unit durations period will be shorter.
So it's, for this case, like 2013, so it will mature in like 2022 instead of your
yes, right.
I see. Yeah. Okay, good. So we understand that, and also you have a guaranteed cooling off period, which is like within 10 days. If you think you don't want this, you can still cash out without any penalty, is it?
Yes, right.
Okay. So okay, these are the like. Can you explain about this? Like regulator, okay. Yeah, the trustee, things like that. Okay.
In fact, if you look at this slide, something that the SSM actually is trying to govern the whole investment activities, right? In fact, our interest scheme, if you can see behind of the wall here, so we had a lot of certificate hanging there because the interest scheme itself, we need to renew our license on fundraising on half-yearly basis. Right? Every 6 months, we need to get all the regulator, like SSM. Before SSM can approve and renew our license, actually, we need to get our trustee to come in, financial auditor. Even though audited report have been audited by year basis because of the accounting standard, but our auditor PKF need to come in on every 6 months to actually to go through our financial performance, our reporting on the financial area, and to actually to put up the recommendations whether we are actually fit and meet the accounting standard and the financial report standard, right? And at the same time also we had independent auditor that appointed SGS. SGS is a ISO external auditor. They actually coming into the company to ensure our corporate governance, compliances like the approval levels, whether we have been followed the rule and the policy that we have been stated earlier.
So, is this like a requirement of running an interest scheme? Is that a requirement?
Yes. Yes. It's to ensure the company not only need to be proven in terms of financial, but we need to proven in the area of management. Right? As myself, as a CEO, I can't just like simply, okay, today I want to approve this thing at this policy. So tomorrow I feel different, so I want to do it in a different manner. It can't. So we already submitted our corporate governance policies and things so on to SGS. So when SGS come in, actually they will audit in such a way. Say example, how we actually dispose our asset, how we actually a policy on our profit, calculations and things so on. So it need to be followed and agreed upon. And of course, when from time to time, because of the certain market changes and things, so we do able to change the policy, but we need to get consent. So meaning this is all the party that actually managing or overseeing on behalf of the investor on our business, right? Whether from the financial angle, from the business operation angles, also so we need to able to comply. In fact, you see, Shariah advisory is IBFIM, right? So IBFIM is one of the 4 Islamic institutions in Malaysia. So what is their role again in this? So they actually govern us to make sure the business that we are running is comply with the Sharia law, to make sure that we don't have the term of interest and things so on. You see, and at the same time also you see the last is a rental asset insured by Takaful Malaysia. So mean here all our asset investment on our rental business actually is insured with all risk insurance. No, so meaning beside on, so our exposure actually is being captured. If just in case if happen any out of sudden kind of risk that related to insurance claim, so we are actually able to claim back the value of the asset. So in fact, the asset is value is being protected by insurance. So 6, if you count it correctly, so we have 6 advisory actually auditor to actually stand on us. Sorry, 5 of it. So include SSM. So we have to get all these recommended approved at every 6 months. Then only we are able to submit for the SSM renewal of the license. So in the other way, say the interest scheme has been monitored frequently on every 6-month basis. In fact, if you compare this with Bursa and those public listed company, they are only submitting their report on a year basis. So we are even more stringent than the Bursa.
Okay. Okay, I think it looks good, and let's. So this is the just now you mentioned, right? This is basically the companies that are involved to make sure that your scheme is running well, and I think this is more of that. Okay, so here, so basically this chart that is like explaining how the whole thing actually works.
That's right. Okay, if you look at this chart, it's pretty straightforward. Currently, if anyone who invests in our interest scheme, so actually putting the money over to the national company. But again, as I mentioned just now, the money is actually kept by the scheme, right? So whenever we are getting the government contract or the contract on our rental contract, so we will actually claim the money then and to buy the equipment for our renting or leasing contract. So and that's how the very straightforward regulations. So as I mentioned just now, the interest scheme have been controlled, meaning we only can utilize the fund that we receive to actually invest on the leasing and renting of IT equipment, right? So it's purely on rental business. So we can't do beyond than that. Even if a rental business, say a property rental, so we can't actually use the money for property renting or even.
So even if your customer, like say the government or one of the corporate, they ask you, hey, can you like rent an office to me, and then you cannot touch this money because it's not spelled out in the spec.
So it's purely for IT equipment.
Okay.
It's a pretty straightforward.
Okay, let's talk about your performance. How is it happening like since 2010?
In fact, we have been keep growing. In fact, frankly, to declare also recently we had secured more contracts, but we do not have significant or sufficient funds actually to fulfill our contract. In fact, some of our contract we have no choice to actually taking financing from the outside instead of from the interest scheme. Right. In fact, you can see we have been growing. In fact, we have started in 2011 starting the fundraise. In fact, during the fundraise, actually we already had secured a number of contract in hands, right? And we go through that existing contract that we have, and we have continued secure the contracts, and we move on. And one thing that are good in this business that even at this current economic situations, so we have easily able to predict and forecast our costs and control on our costs and our business, because when we are running on leasing and rental contract, actually our business is a contractual business, right? So we have the fixed income, fixed revenue return on month-to-month basis. So we are able to manage it more easily compared to some business that actually you will not know when you need to harvest. On this year, you won't know. On this month, you won't know that this month whether you will get sales or you won't get sales. But to us, when our business running on contractual, so we are able to be steadily grow, and we can plan our costs and ahead into a more proper position. That looking at our performance, in fact, if up to now, in fact, we're already crossing 200 contracts, right? So that's a 2015 latest performance, and of course we had the expiry contract and thing, but because of the market condition today, in fact, more company is going option to rental and leasing because of the cash constraint, like even especially the governments. So out of the 10 contracts that raised, actually, I can say easily 8 contracts actually is on leasing and renting. So the market is very demanding.
And typically, like, how long is the term for a contract?
A contract in Malaysia is running at average of 3 years. That's why when you see when we design our offer, our term is 9 years. So this is able us to actually to recapitalize our dollar into 3 term. Minimum at 3 term. In fact, we are able to recapitalize the dollar actually beyond that. Right.
I see. Okay, good. And so this is some of the figures. Rental asset. Okay.
So this is in January 2014. In fact, up to now, currently we have easily 37 over million of asset have been invested. So our turnover, our rental turnover, in fact, by today is November 2nd. In fact, we are already able to know what is our performance of the minimum performance of this year. In fact, this year we are definitely easily hitting 13 million turnover. So it's another.
Right? So this is last year you did 10 million. So this year will be 30 million.
Because when we have the funding that in hand, and we are able to recapitalize on the business. So you see, always I have been using the term of recapitalize, and even just now I also mentioned that when we knowing the business flow, we feel that when we are taking borrowing from the bank, actually we are helping the bank to actually making money. Actually, I have a very simple explanation on this. You see, a lot of people do not aware when, say, example, we have 10,000, right? So if we put it in the FD, so then bank will offer us, say, a 3.5% kind of FD rate, right? But again, say this bank only have 10,000 of us. But again, when someone had come to borrow and the bank will charge a borrowing rate at BRR plus 1.5, easily ending at about 8%. Right? So by that also you should understand why the company is able and capable to pay on 8%. Right? So by the 8%, then you know, okay, 8% minus 3.5%, so bank actually making 4.5% out of the money that we are giving to them. But again, if put it a simple understanding, say this FD is putting at 10 months, right? And bank also for sure that they only basically, if they are only having the 10,000 money, they also can offer a 10-month loan because they need to repay back to us on the 10,000 after the maturity. But again, a second month per se, meaning someone that who borrowing the 10,000, the second month they will be actually paying a 1,000 back plus the interest to the bank. So actually on the second month, do you think bank can actually utilize the 1,000 again to take a borrowing to someone, giving a borrowing to someone? So the answer is yes. But again, the 1,000 of 8% that bank will charge, whether the 8% will return back or profit sharing back to the depositor, they won't. Because they still will only pay the initial 10,000 of based on the 3.5%. So you see, our business actually is exactly same like what bank is doing. The difference is the funding that we receive. We are investing over into the computer. Then we run over the computer. We collect back the money, right? So then the money that we collected back, besides supporting all the operationals and things so on, right? We are actually able to reutilize the dollar that we receive, the principal amount that we receive back, to be buying another unit or another IT equipment for other renting contract. That's how, based on the current total fund size that we are having, actually is about 30 million, that we are capable to have easily 37 or closer to 38 million of asset invested. So that is how we recapitalize the dollar. And that is why also we are very much justified able to pay the 8% yield to all our investors. And we are very quite confident if the sum of the money that actually recapitalized at the bigger size, we are definitely able to pay more to all the investors. So that is how it makes us a difference in the IT business itself.
So it makes sense. So I think before that you also mentioned that it's because ICT kind of equipments, banks treat it as a very high risk thing. So that's why that means they charge you for the financing cost is way more than what you are going to pay, right?
Yes, right.
So
and if you are taking from the bank, let's say we do not have the recapitalize capacity. Bank is the one who recapitalize. Meaning, if say that after I've taken borrowing of 1 million from the bank and I'm repaying say 10 months or so. So meaning every month I'm actually repaying 100,000. But again, if second month I had another 100,000 contract came in, I need to go back to the bank, taking another 100,000 loan again and paying another 8%. But again, when this scenario is putting into the interest scheme, because we are running on the 9 years, so a second month when we had collected back our 100,000 from the principal amount without saying other profitability and thing, so 100,000 back the dollar from the renter, we are able to actually reinvest this 100,000 on the machine and to gain another profit from the rental contract.
So like conservative saying, even like in the because your contract is like 3 years, so you can capitalize at least 3 times of the same money, right?
Technically yes. That's why one of our challenge in the business is we need to have the contract. We need to be fully utilize the dollar. We cannot keep the dollar stay in the bank without utilization. Right? So if as maximum that we can recapitalize the dollar, that will be the maximum profit that the company able to generate. So this is one of the thing that we always manage, and until now, whether it's happy or it's a happy problem is we always do not have sufficient cash in the bank to actually to tackle to our contract. No, we even at the some contract that when we want to run where the interest scheme do not have the return fund available, we have no choice to actually to get it from the bank, right? So because
eat into your profit, right? That'll be eating into your gross profit. And so in this case, let's look at your this is the audited account. I think so, right? So from the first year that it shows that it's not making profit. So I think you explained it over here that why is this so, like in 2010?
Right. So okay, when you look at the this profit the report, so this is up to the 31st 2014. So in fact this is ended at the 31st 2014. Then you can see we have been growing our business from the negative, and it become even in 2013 we are at the negative. But again, this is mainly is after the yield payout. So although the company actually, if you look at the operating profit, actually our profit is growing. But again, because we are paying the interim yield over to the investor at the earlier stage, even before the company able to achieve the accumulated profit at the higher, but we already declare out our yield payment on the 8% to the investor. As I explained just now, our profit it need to gain from the recapitalized business, and reuse of the, to make a more additional or extra profit in the year to year. But again, in the earlier stage, you can see we will be at the negative part. Is because that we have been paying out the 8% yield over to the investor first, although the company had yet really making a very significant profit before declaring of the return. Normally, if you see a lot of company, if you invest on the share proposition or equity, you will see that the company only will declare dividends when the company is at a positive line. But in our scenario, because of our commitment and the so-called guarantee kind of return on 8% annually, although the company is yet meeting the profitability on bottom line, we already pay out our yield. So that is it become when in the book the company will have a little bit disadvantages. meaning our book would not as pretty as if we are not paying out the yield. Right.
I think like from 2014 onwards, it looks very nice. I suppose, right?
Yes.
Because all your contracts are secure, so you have 200 over contracts, and the cash flow is keep coming in. As long as the customers, they are still paying you, right, every month.
Yes, right. Because in that position, we already able to recapitalize more money. So then the thing is moving at the more positive angle. At the same time, if you look at the although our P&L is at the slight profit proposition, but again, one thing that I would like to highlight, if you look at the performance on the previous slide, okay, that this company is a heavy asset investment. Actually, our cost of goods sold, right, is actually equivalent to a depreciation calculation for our asset. Actually, the 5 over million is a non-cash item. So it's not the expenses or a cash that go out from the company. It's on the accounting standard that we need to recognize our asset, the IT equipment depreciation into the book. So in fact, although the book is reflecting in this manner, so we had a slight net profit. But again, the cash that reserved in the company is you need to add on back the cost of goods sold. So that's why in our presentation, we always will present earning before our EBITDA, earning before finance costs, tax and depreciation. So if you look at it, it's pretty very strong. For those that are understanding the financials quantum and reporting, you will see that our EBITDA actually carry easily 60% over to our revenue. So in fact, this is a very fantastic growth kind of proposition. So we are quite
in accounting standard, you already depreciated all the equipments, but in fact the equipment is still running there, right? It's still making money for you.
Yes, right, and generating income. And in fact, after the machine return, we do have our disposal proposition to gain back some of the dollar from the machine disposed. Right, and that's not say that if we reutilize the machine for remarketing and re-rent again, I think we make even a bigger profit from here.
So this looks like the gross profit margin is like over 50% all the years, and yeah, that looks good. And so these are the customers you already have, right? The corporate and also the government sector.
Currently, we can say because we had a limitation of funding available, so we are still very focused on the government sector. I can say 70% of our contract is come from government, right? Why is government? Because to me, government is having the lowest risk compared to the corporate sectors, right? And in this business, also one of the things that we are managing it very concernedly is the risk. Because we are like banks, so we are not afford to have any NPL, right? Non-performing loan, or so-called in the bank terminology. So mean in our terminology is we cannot have a contract that do not able to repay. So any contract that draw under that category, so we will have loss of the cash on the recapitalized and loss of the dollar. So that's why we are still choosing a government, since our funding is limited. So, and because government basically you won't have the scenario that I won't pay you before.
No bad debt, right?
Right. So of course, I think people have said some that whether on the issue. I think those is all political. So to me, as a business, I think we are very keen and very understanding on our business and our way of protect the business risk. So we always do it at the maximum that we can. Right.
So I can see that there are two set of challenges to do your business, because the first is you have a secured contract, and I don't see any difficulty in it because you secure more and more contracts, and but what you mentioned is that in fact now what you're facing is your lack of funds. So it's the other set of challenge is more challenging. That means like you want to sell this interest scheme. This is even harder to sell, right?
Yeah. In fact, this business is I think a lot of business is about chicken and eggs. Right, so whether you have the dollar first, like in our scenario, whether you have money, then you don't have contract, or whether you have contract, you don't have money. So as a businessman, always we need to manage this piece. right?
Okay.
So, however, whether we had, I think our roadmap is there, so our progressively is there. So I'm very happy with my team. So this whole thing is not operated by myself alone as a founder, as a businessman. I think furthermore I had the right team, to actually drive the business. So that's why we have been growing from years to years.
And you're part of the subsidiary of this NTP World Group. What does NTP World Group do? So that is going to giving the synergy to your company.
All right. Actually, NTP World Group had been started in the year of 1997. Right. That is the first company on NTP World Forum that you can see there. That's started with my group MD, Dato' Mr. Ng Thian Peng. So he had started his business in training and educations. Even currently, we are also actually handling the national service program. So we are one of the contractors that actually manage national service program since 2004. Right? Even the recent National Service 2.0, we are also continue actually supporting and manage to get the contract to manage that piece. And beside on that, you can see Asia World Summit is a company that are doing conferences, like a corporate governance conferences, urban city development conferences, and things so on. Actually, my group MD, Dato' Ng, had been actually started this whole work group vision on day one with his initial startup only with 2,000 ringgit Malaysia at the age of 24 years old.
Wow.
So that's how he started his business. So to have today the group, we had consists of the training and education division, the IT business divisions, and we had also venturing into property development on starting on last year onwards.
I see.
So this is all actually with a dream, a simple dream of him to actually gather everyone that he know and especially the friend to venture and grow the business together. Right. So this is some of our recognitions and things. Right. Tan Sri Megat Nasmuddin is our chairman on board. So this is Dato' Ng Thian Peng.
Yeah.
Dato' Ng Thian Peng. So he's now also at the age of 40, like me. We are actually a schoolmate.
Wow.
Schoolmate, driving the dream together.
Nice. Okay, good. So one last thing is I know that you need to market your scheme because you need funding to handle all your to fund all your newly secured contracts, and you pay a certain commission to the marketers, right? So how do you distribute your fund, and who are the marketers, and can you tell us more about that?
Currently, actually, we had engaged some of the financial agencies who are actually doing a financial product like mutual funds and things so on. Very frankly to say, also, I'm not in this specific on the fundraising industry. This is not my key core forte. But when you talk about IT, leasing, rental, yes. So that's why, to me, that's why we had been deciding to actually outsource in the manner to appoint those prominent financial managers that actually in the market to actually help us to raise our fund for our interest gain. So, and we have been actually pay out the rate of 4 to 6% kind of to actually to commission to allocate to actually to do the fundraising exercise activities. We do, I think, from some slide, even over the website, you can see we do participate numbers of roadshows, even radios and things so on to actually get awareness, to get people to know about our product, about our business.
So in this case, do you have your in-house marketer, or does your marketing department they just serving the agents that you appointed?
In fact, we don't have our own team. So what we are actually, the team that are having in our office is actually the team that actually doing the our agents that to do the mainly actually marketing arrangement to help out on. In fact, I actually set up in the office to actually sell. So it's everything actually go through the agencies.
Through the agency. Okay, good. So just a final word. If my audience they are interested to know more, they probably want to invest in this kind of scheme. What can they do? Like, can I like collect their name and then do you pass it to your agent, or do you have your in-house people to actually serve them?
In fact, if you have any in fact, talking until this moment, looking forward by this November month, actually we are going to launch we call it 21 referral program. They're actually offering to all the direct investor, to actually take some referral fee, and even introduce to their friends, and to actually to invest in our structure, to our investment. And by that, in fact, we are actually having a team that actually specifically will be managing on these program. Yeah, referrals. So I think to the agents, our agents will be stand more independently to actually manage their own clientele. Right, and for anyone that who actually came direct to us, we had, because in fact, if you look at this investment, if they able to communicate and understand from over the internet and over the phone and thing, actually the investment is pretty straightforward. It's not a very difficult kind of process. So everyone actually can invest easily through us also. It's no problem. Right.
Okay.
Because if they have looking forward on more personalized explanations and understanding, we have always had our agents to be actually referred to. Right. So actually, good. To me, both way is workable.
Okay, so for anyone who are interested, just you can go to this website, ICT Zone, ICTZVentures.com.my, right? ICT.
Yes, right.
Yeah. Here's a Z. Okay, ventures.com.my, and then you can also contact them directly here.
Yeah.
Or if you want to, I probably can put up a form under this video where people who are interested, they can just submit that information, and you get your guys to actually call them. Is that possible?
Yes, okay. No problem.
Okay.
In fact, we most looking forward that also our program 21 referral program will be a very new assignment to the investors.
Nice. Thank you, Tommy, for attending this interview, and you really help us understand this industry a lot. So thank you very much. Thanks for your time.
Yeah, thanks, KC, right, for this session. Right, really appreciate that. Okay, and
talk to you again.
All right, bye.